something. I will turn that on. It was 1 minute to the meeting that I had to switch the room. So thank you for your patience.
You did great. That was fast.
Yeah.
Awesome. Yeah, thank you. Cool. So welcome to May's Affordable Housing Resident Oversight Committee. I will be the facilitator for this meeting, Riley Jacobson. He, his pronouns, and I'm the co-chair for the committee. So I think what we'll do is we'll begin with the land acknowledgement. And who was reading that for this month?
It's me. Sorry, I have multiple screens and just lost as soon as the screen share kind of threw it all out of whack. But let me get started. We, as members of the housing system in Missoula, acknowledge that we are in the homelands of the Salish and Kalispel people. Today, we offer our respect for their history and culture, for their ancient and continuing presence in this landscape, and for the path they have shown us in caring for this place for the generations to come.
Awesome, thank you, Will. So yeah, we'll go around and do some introductions. Starting off tonight, as previously stated, my name is Riley Jacobson. He has pronouns. I will be your co-chair and facilitator. And then Aubrey, would you like to go next?
Thanks, Riley. Hi, everyone. I'm Aubrey, she, her pronouns, and I am the Affordable Housing Trust Fund Coordinator for the City of Missoula. I will call on Christine next.
Thanks, Aubrey. Good evening, everyone. I'm Christine Littig, she, her pronouns. I go by Christine, and my role on the committee is that I was selected by the county commissioners as a representative on this committee. Let me see, Will?
I'm Will Seaburn, community member on the committee, he, his pronouns. How about Paul?
Hello, I'm Paul Herendeen. I use he, him pronouns, and I represent the financial industry through my day job at Clearwater Credit Union. Let's see, how about Emily Schenkel?
Hi, I'm Emily Schenkel, she, her pronouns. I am a community member and I'm an alternate for the housing community. I'll go with Ricky.
Hi, I'm Ricky Henderson, she, her pronouns, and I am the Housing Programs Manager for the City of Missoula. And I'll pass it off to Emily Harris-Shears.
Hi, I'm Emily Harris-Shears, use she, her pronouns. And, oh, that's right here. I am not on the committee. I am the housing policy specialist for the city. And I'm just going to apologize now. I'm in the East Coast and it's late, so my brain is ready for bed.
Awesome. And then Lori, we're going through introductions, role in the committee, and pronouns. Would you like to introduce yourself?
Yeah. Yep. Thank you. My name is Lori Davidson. I am the representative on the committee from the Missoula Housing Authority, and I use she, her pronouns.
Okay, I think that's everyone. So real quick, we'll just go over some of the norms that we voted on, decided. Just please strive and always remember with kindness to have respect for differing perspectives, step up, say your piece and step back, be and stay present. If you're unsure, don't hesitate to ask. We're going for strength-based conversations here. We're going to celebrate successes. We'll spell out acronyms for the understanding of everyone, accept loose ends. We'll push ourselves to do the best we can, respect the privacy of others, act where we can, accept the pace of the work, not being too hard on ourselves. And let's check in on our norms. Are we comfortable in our operating procedures? And please remember to raise your hand and we'll call upon you and we'll do that thing. Yeah. So if you're on your computer or laptop, there should be a raise the lower hand while on the webinar. Just please do that. We'll open up for public comment after each section. And if you have any questions, feel free to email the email that's listed, or you can call and leave messages. That I'm guessing that's for actually calling in on the meeting, correct?
Correct, yes.
Awesome, thank you, Aubrey. And yeah, I think if you're on your phone, you can press *9 to raise hand, press *9 again to lower hand, and we will do our best to see all comments as they're coming in. All right, then, so first order of business, we will go over the April 13th minutes. Do we have any motions to approve them?
I move to approve the minutes from April 13th, 2022.
I'll second that.
Fantastic. Okay, so the minutes are approved from the April 13th meeting, and we will continue moving forward.
Hey, Riley.
Sorry, what's that?
I think that you didn't vote yet. You just got your motions, right? Am I right?
For the minutes?
Yeah. I think you got your motion in your second, but I think you still need to have the members vote.
Oh, well, let's get a vote in there then.
Sorry.
My apologies, y'all. So all in favor, is that an all in favor vote?
Yeah, just a quick question though. What's our quorum? I saw Laura was on, but I think we only have 6.
You have a quorum. Quorum is
Oh, we
6.
do?
Mhm.
Quorum is 6. Okay, great.
It's the 10 voting members.
Okay,
So Emily is acting as a voting member.
got it. Perfect.
So all in favor of approving the April 13th minutes, say aye.
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 Anyone opposed? All right. So now the minutes are approved and we will move forward. Sorry, y'all, I'm going off a different committee's rules there. So with our first order of business on tonight's meeting, we have a financial tools and resource presentation with Paul. And that being said, Paul, you have the floor.
Yeah, thanks. I'm more than happy to dive in. Or is there any public comment or financial or any of the other stuff above me on the agenda, or is that all taken as read?
We have one member or one guest, and I'm not sure if they'd like to give public comment. So now would be a good time. If you'd like to give public comment, you can raise your hand. Okay.
You've been unmuted.
Hi, everybody. My name's Jenny. I run a affordable housing discussion group now on Nextdoor. So I'm just hoping to learn more to share on the affordable housing discussion group. So it's geared to be more of a statistical sort of research-based kind of look, not just a gripe online. But you guys are the main resource out there, and I'm glad just to listen in and learn. Thank you so much.
Thank you.
Great. Is that back to me then? Terrific. What's the best way to do this? Do you all present what's in the packet? Would you like me to share my screen and run through the slideshow from my end?
I would appreciate the slideshow from your end, Paul.
All right, let me see if I can't pull that off. All right, let's try this. Is that working for folks? Great. All right, I'll consult my notes. So first of all, thank you for having me. I appreciate it. I am here to talk about affordable housing finance. And I'll start with the first of what will be more than one caveats. And that is, I do work for Clearwater Credit Union. I did use their PowerPoint template for this presentation, but in this case, I'm not speaking on their behalf. That takes a number of internal approvals. So the material presented here is entirely my own, and any mistakes, misrepresentations, omissions are entirely mine as well. I'll also say that I'm not an expert on affordable housing finance. I did speak with some experts, and I'm happy to present my take on it and my conclusions, but there is a large community of people who've been doing this work at a really high level for many years, and I want to be clear that I'm not one of them. So I don't claim to be. All right, let's see if I can advance this slide. All right. So with that out of the way, affordable housing finance, really broad topic, right? I mean, all kinds of stuff is in there. Basically, to my thinking, there's three big areas. The first of those is finance for purchase of a home. The second of those is project finance, building more of this stuff, either for rental or ownership. And then the third one of those is rental assistance. I'll be speaking today about the first one of those. That's the one I'm closest to. I think we all probably agree that in a lot of cases, home ownership is a good, particularly in this time of rising rents. It provides security for the price of housing. You get to build equity, you have control, and you may benefit from appreciation. House prices appreciating rapidly are not good for affordability. If it is happening, it's probably better to be getting a benefit from that than getting hurt by that. Now, that said, homeownership is not the right thing for every situation and every person. And whenever we talk about housing, I think it's really important that we keep rental housing in mind as well, not just as like a step on the path to homeownership, but as a viable form of housing in its own right. And this is really critical, especially now. It's a bummer to not be able to afford to purchase a home, but to be stretched on your rent or pushed too far on your rent, that's an urgent problem that can easily become an emergency. That's the area that I am the least close to, and I can't really say anything intelligent about that. And that's a case where I really would not want to speak for the people who are dedicated to doing that work and are really good at it. So I won't talk about that, but I think that is really important to mention. So when it comes to financing for home purchase, there are a lot of options. I started looking into this. I had some conversations with our lenders. I had some conversations with other folks. There are many, many different mortgage and financing products available out there. I'm going to run through just a few here. I'm going to do it fairly quickly. I don't expect you to remember the details of all of these. And again, I don't pretend to be an expert on it. But I think as I run through these, you'll get a sense of the mechanisms that these use to promote affordability. And that's where I'll take the discussion after that. So very briefly, just from the top, if you want to purchase a home, first option is a conventional mortgage. Sometimes these are called conforming mortgages. This is just your standard 5 to 20% down kind of thing. A lot of different options. And the reason they're called conforming is that typically these will adhere to federal lending guidelines. The upshot to this is that the mortgage originator can then sell it. That's what Fannie Mae and Freddie Mac do. They purchase these mortgages. That's attractive to originators because, long story, but basically you get to take the interest rate risk off your books, right? If the federal government were not willing to purchase a 3% mortgage, 30% mortgage, 3% 30-year mortgage, that's a very difficult loan to make. That's not an attractive loan to put out as a lender. But if you can make that loan, sell it to the feds, move it off your books, it looks much better. So standard mortgages. Next up is the Federal Housing Authority mortgage, first-time home buyer mortgage. The benefits to this one is you can put much less money down. This can be a 3.5% down loan. It has a lower closing cost, and it has looser underwriting for the borrower. Next up, Veterans Administration home loans. These loans are available essentially to veterans of the armed services. And these feature, these can have zero down payment. They can have no mortgage insurance, right? So typically if you take out a mortgage below 20% down to get extra security for the lender, you have to take out additional insurance in case you default. The insurer then pays it off. But in this case, you don't get mortgage insurance, and that can be a significant cost, a couple $100 a month. The VA loan also has no closing costs. There are just administrative filing fees that go along with getting a mortgage. This loan doesn't have those, and it has a lower rate. Next up, USDA rural development loans. There's a couple different flavors of these. I'm not going to talk a whole lot about these because these do not apply within Missoula city limits. They do apply in some limited areas on the outskirts of the city and with strict income restrictions. Next up is the Mofi Home Now loan. This is a pretty good loan where they will actually give you an additional loan for the down payment. It stacks onto one of these other products, and then they'll lend you the down payment. But that down payment assistance is what's called a 0% deferred loan, where you don't pay any interest on it. And then the whole balance comes due when you sell or refinance the house. So you can basically ignore it until then you pay it back. I'll get more into that later. Next up, Montana Housing, a program of the Montana Department of Commerce. They do a number of different loan products, including just regular 30-year loans. They will also do a 80% loan, no mortgage insurance, but partnering with another organization will provide the additional 20% loan. So they stack them together like that. And they do provide down payment assistance, both in what they call an amortizing form, where you pay it off over time, and then in that same 0% deferred. So another good program. Then there's NeighborWorks Montana, which NeighborWorks is one of those providers of the additional 20%. So they'll partner with somebody like Montana Housing, and then NeighborWorks will provide the 20% loan at a slightly higher interest rate. NeighborWorks will also loan on the closing costs. A significant program I did not put on here that I do want to be sure to mention is the HUD 184 Loan Guarantee Program. This is run through the federal government. It is available to American Indians and Alaska Natives, and has a number of benefits. Again, low or no down payment, low or no mortgage insurance, flexible underwriting. In addition to that, there's a bunch of others. This is far from an exhaustive list. These are all fairly complicated, and many of them relate to each other. You need to have eligibility for one to get this other one, or they're designed to work together. And there's just a lot. There's a lot. They're complicated. They're difficult to work on as lenders. That said, there are a lot of good lenders in this town who are totally committed to the work and are willing to go through the additional steps to get people into these programs. So that's really important work. And there's a lot of people in this town who are really good at it. So all of these are available, and there's excellent lenders who can help people figure it out, make it happen. The other thing I want to note about these is that many, if not most, of these programs are income restricted. And that will vary depending on the program, but typically those are for either 80% area median income or 120% area median income. So these are not available to all borrowers. Or I should have said at the start, if anybody has questions, feel free to throw a hand up. I'm happy to stop and take them. Christine.
Just real quick, Paul, I didn't remember if I heard you say this. The Mofi Home Now, is that first-time home buyers only?
I don't believe so, but I can't say that for certain.
Okay, thank you.
Yep. Riley.
Thank you, Paul. So when you, just for clarification, when you say that most of the loans are available for 80% AMI, are you saying people who are below the 80% AMI, so in like that body of low income, or above it?
Below. So,
Okay.
so everything's available for 80% and below. Some of them are available for 120% below.
Thank you.
Yep. Will.
Paul, you mentioned that there's like lenders who are willing to do the work to help put together this financing, leveraging all these different sources. I know you may not see it as much as maybe like an agent, like a buyer agent would, but have you seen like whether or not that impacts the acceptance of offers at all? Because I don't know if it comes with other contingencies and things like that that are, require more things than a conventional loan would, or does it tend to mirror the same contingencies that would be accompanied with just a straight up conventional loan?
Yeah, that's an excellent question, and I should have mentioned that. Thanks for bringing it up. So again, the first thing about these loans is they're complicated. They take a lot of extra work on the part of the lender, so you need to find a lender who really wants to do it. More specifically to your question, yeah, absolutely. These are complicated loans to put together. It is harder to get an offer accepted than a cleaner offer, a less complicated mortgage product. And in this particular market, it is going to be a huge challenge to get an offer accepted that uses one or some combination of these programs. That is a major problem in a super hot market like this. That's true even for just a regular vanilla 20% down conforming loan, right? Now you have a financing contingency and you're competing with cash offers. So one part of that I didn't mention is there are various what they call fintech companies out there, financial technology, that will do things, financial engineering essentially, that allow you to make what looks like a cash offer. But in fact, there's, on the back end, you don't actually have to have all the money ready to go on that. That'll be one additional level of complexity. I don't know how well those are going to play with some of these federal programs, but big problem right now for sure.
Paul, just a follow-up question. Do you know if any of those fintech companies are active in Missoula right now? And would they work with a lender like Clearwater to set that up, or do I guess, yeah, maybe just an open question of how aware are you of their activity in Missoula currently?
I personally am not that aware of it. I'm not sure I'd be the right person to answer that. My impression from the outside is that those things are basically built to be fairly location independent, right? You don't need an agent on the ground. You're running this thing out of the Bay Area. So I expect that if you're comfortable doing business online, you can certainly get put together with one. How they interact with these other mortgage programs, I'm not sure at all. Okay, I'll move on. The slide that I think is up now explains why I ran through those so quickly, right? Like each one of those, as I started to research for this presentation, I'm like, oh man, there's 45 pages on the details of this particular program, and there's 15 programs. But if you look at them as a whole, there's really only so many levers that these programs have to affect affordability and people's personal financial ability to get into a mortgage, right? And they just put them together in different ways. So really, when you have programs like this, what they can do are modify some combination of these elements. Those are, first of all, a higher loan to value rather. This is where it comes down to what your down payment is. If a standard mortgage to avoid PMI, private mortgage insurance, is 20%, you can also get a standard 5% mortgage, 5% down, where you are going to be paying that PMI. And then some of these other programs will push that even lower. The lowest one I saw, well, actually, you can probably get down to 100% loan to value, 2.5%, 3% is pretty common for these programs. Now that's good because you don't need as big of a down payment to get into it. And as prices go up, those down payments become significant. But those can be bad because as you borrow more money, you are paying a higher monthly payment. But nevertheless, loan to value, one of the major knobs that people like to turn on these things. Associated with that is how mortgage insurance is treated. Do you need it? Can you get rid of it once you once you paid the loan down a little more? So very commonly in these, they'll have cheaper mortgage insurance, they will waive mortgage insurance, and that is one way to bring the price down. Mortgage insurance, huge range in what it costs. Just as a ballpark estimate, something between 0.5% and 1.5% of the loan value per year. So if you're looking at a $300,000 home, 1% of that is going to be $3,000. Divide that throughout the year, you're looking at $250 a month, significant amounts. Okay, another big lever here is down payment assistance. How do you come up with that down payment? And I guess I would roll closing costs into this. Closing costs, again, can be about 1% of the total value of the house. So how do you come up with that money, right? And there are a number of ways of doing that. One of those is what they call an amortizing loan. Amortizing means you pay it down. So you just get an additional loan, maybe from a different source, that'll let you pay down that down payment over 15 years, 30 years, something like that. Another option, as I mentioned before, is what they call a deferred or a 0% deferred loan, where you do get a loan for the money, but you don't pay any interest, and then you pay the whole loan back when you sell or refinance the house. So you just kind of get to use it, but you got to pay it back at the end. And then in addition to that, there can be forgivable loans, or which are essentially grants. So you just get a check. In most of those cases that I've seen, the amount of assistance is limited, somewhere $10,000 or below. But this is another way that these products can help people. Those are honestly the three big ones. What other things that come in here that you do see, one is a lower rate. So you'll just get a lower rate than whatever a market rate mortgage is. Discounts, I think, generally are like in the range of 1 percentage point here. There may be some exceptions for very limited groups that are lower than that, but that's what you're looking at for a discount. And then along with that is more relaxed underwriting. So that might be a way to help people get into loans if their credit isn't so great. And that's where those interest rate discounts can be even a little bit bigger. That said, I was surprised to learn there isn't a huge spread in mortgage rates based on your credit score. I mean, there's definitely a difference, but it's not nearly like it is in something like a credit card or a car loan. And I think that's because the security in the home is so good that spread isn't quite as big. Yeah, Will.
Paul, I had a more general question about interest rates that I've always been curious about. Like when you hear in the news that they'll say like mortgage interest rates are at 5% now, for example. I was curious, like, what's the right index to look at for that, and how is it constructed? Because I know sometimes you can buy a lower interest rate by buying points at closing, like you pay more upfront for a lower interest rate. So is there like a good, like, what do you look for to kind of understand what's going on in the market? What's like the good resource that best kind of aggregates all that information?
That's a good question, and it's one I've had myself, right? A lot of lending can be very easily pegged to what they call prime or the federal rate, where there's the federal funds rate, and like it's okay, it's usually that plus 1.5%. Interest rates, mortgage rates do not work quite like that. The federal funds rate has gone up like, I don't know, 0.5 percentage point or a percentage point. Mortgage rates have gone up like 2.5 percentage points. So the shortest answer is I don't know. The next shortest answer is it is a market. It really is a market, right? It is set by the market. And so there's a lot of things that go into that. Creditworthiness, expectations for what's going to happen to the broader macroeconomic picture in the future. What's the competition doing? And I don't know how those pieces play together. As you mentioned, this does get complicated quickly. You can buy down the rate by paying more upfront. You can get an adjustable rate mortgage. Those are becoming more common right now. This was a big deal before the 2008 housing crash. Basically, instead of a 30-year fixed rate mortgage, you say, okay, it's going to be fixed for 5 years or something, and then it's going to reset every year. That was a problem before 2008 because the initial rate tends to be quite low, right? Like, long story short, but as you lend money, the longer the term, the higher the interest rate needs to be because you don't know what's going to happen in the future. So you get an adjustable rate mortgage, the initial payment's low, and then it resets, and all of a sudden, depending on what's happened, it becomes unaffordable. That has not been a big part of the recent run-up in home prices, but now that mortgage rates have spiked, all of a sudden those are becoming much more popular. You can shave about 1% or 1.5% off your mortgage rate if you go to an adjustable rate mortgage. Okay, any other questions? All right. So with that last point in mind, that these typically are income limited, I wanted to switch gears a little bit and talk about the context. So as you are all well aware, the income restrictions are typically tied to what they call area median income. Median meaning half the people make less, half the people make more. These numbers are produced by the by HUD, Housing and Urban Development, federal agency. And that's what defines eligibility for all these programs. I put this together, and then even in the day since I did this, turns out these have been updated. These numbers are no longer current, and there is also a typo in that 80% row. But basically, the median income for Missoula with the latest numbers has gone up by about $8,000. So at the 80% level, you can basically add about $5,000 to each of these numbers. This is a lot of information here. You don't even know all this. As I go through the rest of this, I'm going to talk about the median family income. So like really just sort of the general total median of the whole thing. But this does change by household size, as you can see. But from here on out, I'll talk about, when I talk about median income, I'll be talking about median family income in Missoula. As of the latest update, that number is about $80,000 for a family. That means 80% AMI is about $64,000. 120% AMI is about $96,000. One way I like to think about this is, okay, let's say you've got two people in the house working full time. What kind of hourly wage are we talking about here? So currently for 80% AMI, that is two full-time people earning $16 an hour. For the 100% AMI, two full-time workers making $20 an hour, and 120% AMI, $24 an hour. Just to give you a sense of how this relates to our local labor market. Now, the next up, as you're also well aware, the median home price in Missoula has gone up quite dramatically in the last couple of years. I got this from the Missoula Organization of Realtors. Their numbers only went back to 2018, the stuff that I found at the surface level. But in that time, in 2018, the median home price was about $300,000. As of Q1 22, it's about $510,000. A point I've made before, but I love making, so I'll do it again, is that the median, again, means half of them are below it, half of them are above it. It doesn't tell you what that distribution is like, right? And it's not even. I think it's safe to say there are a lot more houses available in Missoula at $750,000 than there are at $250,000, right? So there's some compression below the median. And that can be seen here. This is also from MOR. This is current through the end of last year. And that teal line up in the top, single family residences, that's $150,000 to $300,000. And as you can see, those have basically gone away. There are essentially no single family homes available for less than $300,000. Similarly, in townhouses, that number has gone away. So it's, I think at this point, given that prices have gone up since then, functionally, it's safe to say there are no townhouses or single family homes available in Missoula for under $300,000. So with that in mind, let me see if I can make this happen. 1 second. So putting that stuff together, here's just a little spreadsheet I made up. There's a lot of information on here, so I'm going to walk through this briefly. But this is basically a back of the napkin model to relate income to affordable housing prices. This, again, this is not precise, but I think it's roughly correct. This assumes 1% a year for insurance, 1% each for insurance, taxes, and upkeep. And the affordability threshold here is 30% of gross income, gross meaning pre-tax. And this is another important point that I love to make, so I'll make it. You often see this as affordable housing, right? What this is the maximum amount that you can purchase it at before you spend $1 more and now you're a cost burden. That's not a great place to be. 30% of gross income pre-tax means you are spending more than 30% of your after-tax income towards housing. So this is the absolute maximum. Life is a lot better if you are spending 20% of your gross, right? You have more room for savings, for emergencies, for education, for your children, for just living your life. So this is stretching it, is what the maximum is. So what this chart does is on the bottom, it shows annual gross household income. On the vertical axis, That's the maximum affordable home price. So this first round of this this is for an 80% mortgage, 20% down, which means you avoid mortgage insurance, standard conforming loan. I used 5.5% interest for this. That's probably gone up a little bit since I put this together. Now, this does assume that you have the down payment. The down payment is coming from somewhere, right? And the closing costs. So looking at this, the way you can kind of read this is, let's say, okay, the median family income, it's about $80,000. If you check out the line on that, that means that your maximum affordable home price is going to be about $300,000. So may not even really be possible in this market. If you are making 80% of AMI, your maximum affordable home price is $225,000. If you're making 120%, so 26 bucks an hour, 2 people, the maximum affordable home price is about $345,000, which in my opinion is probably about where you might be able to get something done in the current market. In all of those cases, that means that you are bringing somewhere between $50,000 and $75,000 to the table for the deal. If you are in a more stretched financial position, you might be doing a 5% down mortgage, right? So now your monthly payments are going to be higher. You're paying private mortgage insurance, but you need a smaller down payment. In this case, if you're making the area median income, your maximum home purchase price is about $235,000. For 80% AMI, it's 180, 120% AMI, 275. You're still bringing between $40,000 and $55,000 to the table to make that happen. So in this market, it can be very, very difficult. So bringing this back to the discussion about mortgage products that can try and assess this. Oops, let me do that. I put together another one of these. All right. And what this is let's take all of those incentives, those 5 knobs I showed, let's crank them all up, right? We're going to take a percentage point off of the mortgage rate. We are going to get rid of PMI. We're going to do a 2.5% down payment, and that's going to be in a 0% deferred loan. You never have to pay for it until you sell the thing and you pay it all back. We're going to do all that, right? We're going to crank all of those knobs all the way. That might not even be possible to do, to stack all of those programs together. You might be able to get that done at 80% AMI. You're not going to be able to get that done certainly at 120% because you won't qualify for some of those programs. Nevertheless, let's crank them all. So you do that, that's the solid line. And as you can see, the effect of that really just pushes you back to that 80% mortgage. You got the 20% from somewhere. I won't run through the numbers because they're pretty much the same, but that's the most we can do through these knobs on the mortgages themselves. You're still looking at, for area median income, I guess I will do the numbers, you're looking at $275,000 for a maximum home purchase. For 80%, $180,000. You don't need to bring a down payment. That's a big deal, but you're still a long way from market affordability. Then the final point I'll make with this is, what does this look like if we actually want to get to a comfortable place? Not 30% of gross income, 20% of gross income. So this final line on the bottom there, it's 20% gross income to housing. We're still applying every single knob that we have through these mortgage programs. In this case, if you're making area median income, your maximum purchase price is about $185,000. If you are making 80% of AMI, your maximum purchase price is about $150,000. So to sum this up, even at a 30% gross income to housing, and we are using every available incentive through mortgages to make this more affordable, there's still a gap between the maximum affordable purchase price and the market. Say the market is $350,000. There's a gap there of $25,000 to $170,000. So let's see if I can get back to my slides. I don't know if I will. Well, there's not much to look at the end. The last slide basically is the conclusion, which is that these financing products for purchase are really, really important. They help a lot of people and they do a lot of good. And there are a lot of folks working really hard to make them work. Unfortunately, really what they're best for is helping solve personal finance problems. Maybe you just don't quite have a down payment. Maybe your credit's not the best. They're really effective there. What they're not effective at is improving affordability. And they're really not going to get there with the tools that we have available to us. I will say in conversation with some of the people I spoke to about this, they expressed that to me kind of bluntly. I mean, they're like, we love getting people in homes. We like helping people out. And it's great. You want to learn about this stuff, but like these are getting steamrolled by the market. So there are options available to help folks, but they are not sufficient to address the price and affordability problem. Will.
Well, I was just curious because like this chart, I mean, basically the maximum home people would be able to afford on those other charts is somewhere in the maybe, like if you stretch it, $200,000 to $350,000 range. We virtually have no housing stock left at that range. So I'm just curious if those experts, you know, they're saying they're helping people, but did they share any data? Like my guess would be each year since 2018, they're able to help fewer and fewer people. The number of people that they can support is actually going down. Did they share any data like that?
Not data, but anecdote. I mean, expressing exactly that, which is just, I mean, honestly, every time I've had a similar conversation with our mortgage lenders here at Clearwater, they're just like, there's no inventory, the prices are too much. So I don't want to take away from the hard work they're doing because they do these loans and it takes a lot of work and they really like making them happen. But yeah, again, anecdotally, I've been told almost universally, like this is not going to solve the problem. All right, well, that is my presentation. I'm happy to take any other questions. All right, well, let's see, Aubrey.
Mine's less a question than a comment, but this presentation was super helpful. I've like had quite a few friends lately who make under 80% with their partner and have used like these down payment assistant resources. And I had no clue, I guess, like before this position that these were available. And I appreciate you presenting to like show others that they are. So thank you for that, Paul.
Yeah, thanks. I'm happy to do it. And again, there's a lot of people like, you know, I won't even list them all because there's so many and I don't want to leave anybody out, but there's a lot of folks who are out there on the ground doing this work and really want to give the kudos to them. Ricky.
I'm just curious, Paul, I know it's, you know, you mentioned the 30% and not going above that and ideally staying below it. Given the market though, and these numbers and what we're seeing, not just in Missoula, but across the country with increasing costs, is there any talk within the financing industry about raising that 30% to qualify to get more people into homes? I mean, looking at not just buying, but also renting, knowing that a lot of our population is renting at much higher than 30% of their income. Curious if there's any talk of adjusting that.
Yeah, so good question. Two things about that. This isn't a lending limit. This is what's considered to be an affordable, what's affordable limit. And I'm not super familiar with how that was derived. As far as lending limits, those will go much higher. I mean, typically lenders are looking at a total ratio of debt called debt to income. And usually for mortgages, you can get approved into like the 45% debt to income range. From the personal finance perspective, it's really not a good idea. You are stretched super thin. And as a lender, this is a tricky thing because you want to help make things happen, but you want to not put people into bad situations, right? Where a car breaks down, you lose your job, and then everything comes apart. So you definitely can get lent much higher than 30, but it's getting risky. Emily.
Let's let Will go first, and then
Sure.
I'll go.
Thanks, Emily. Paul, I was just curious if the folks you were talking to saying like these programs aren't going to be what solves the problem. do they say anything to you or in your lender community about what really needs to happen? Is it simple as just we need more supply, or are there other solutions that people have suggested to be able to solve the affordability question if these are more geared towards solving the personal finance issue?
Yeah, that's a great question. And it's one my boss asks me all the time is he's like, what communities have done this well? What are the models? And it's hard to get a good answer to that. You know, in general, yeah, supply helps a lot, for sure. And has been kind of my view, supply. Now that said, you know, I've been spending some time in Bozeman lately, and they're building like crazy, and it's super unaffordable. And we've also reached this point where it is a national problem and people do move, right? So if we can build enough supply in Missoula that you can buy a home for $250,000, the demand is going to be nearly limitless, right? People will just keep moving here, which I'm all for. I have nothing against, but it does make it challenging to build your way out of it. So I'm not sure what the answer is, to be honest with you. I mean, I think things like land trust housing, where the resale is restricted, could be really useful. And I think expanding land trust housing, and honestly, a lot of support, which typically means federal support, because that's where the money comes from, into higher and higher income brackets, is also going to be really important. You know, 100%, 120% AMI isn't doing it for you anymore. So those are options. You know, I'm interested in, but can't speak intelligently on the idea that Josh Schlotnick brought to us a while back, where you get some assistance to bring the purchase price down in exchange for that deed restriction, something like that. Some combination of those. You know, I wish there were a simple answer, but all that said, I do think more supply certainly does help. Emily.
Yeah, thanks for saying that. I've been thinking about this a lot, and I feel like it's a combination of intentional build that has a subsidy on the front and the back end. So a subsidy in the construction, and then a like support for down, you know, closing cost assistance or down payment assistance at the other end. And I think that just, like, we're seeing that in some of the projects that we're working on, is that to make them really, like, not pencil necessarily for the developer, but pencil for the buyer, they really need to be subsidized in a meaningful way. And so I think that's just something I want to, like, name that. I think I really appreciate your modeling, Paul. It's really helpful, and appreciate that you took the time to do that. I'm also just, like, kind of gobsmacked that you would take the time to do that. It's really just special and meaningful. But I, like, appreciate that you named that the maximum price is really what caps you at the 30%. And that's something that we're trying to really communicate to developers, that, well, you could go up to this, you know, this maximum price point. There may not be buyers in that like realm or bracket, and that you might want to consider bringing it down 10 to 15%, so that you can hit a broader range of people in that AMI category. So I just think, like, if that's something that this committee wants to continue, I know you've all had some interest and curiosity about incomes and AMI language and how to communicate that to the community. So I just wanted to name that. I think those are really important and relevant pieces. And I was just hearing today that, like, you have to price. I'm at a shared equity housing conference, and I just was hearing today that, like, really, to be able to get a buyer with a limited income into a home, you should really be pricing it about 30% lower than the market value. And I think that gets challenging as the market value climbs, but just something to think about too, of, like, where we're pricing these homes that are intended for people at 120 or below.
Yeah, thanks, Emily. And I'll just follow up on that real quick, Riley, if I could, before I get to you. two things about that. Yeah, you mentioned subsidy, right? And if you want to make these affordable, subsidy is really important. And that, to the extent that I was going to make any point about project finance, that was going to be it, that subsidy is increasingly required for those. So the money's got to come from somewhere. The Build Back Better Act failed. There was going to be housing money in that. And we are also limited under state law in our ability to use some of the sort of most obvious fundraising mechanisms. Things like inclusionary zoning, things like real estate transfer taxes are actually not allowed under state law. So if we're serious about this, we're going to have to find the money from somewhere, and that might take policy change. Yeah, and the other, well, I guess I'll stop there. Riley.
By all means, please continue. Also, thank you, Paul. So when you brought up Commissioner Slotnick's idea, it kind of triggered something in my brain. And so this is more of a thought for the broader committee, which is earlier when I was researching rental properties and applications and stuff, there are some rental management companies that are starting to require people to have a working Missoula address, and also like a live-in address and residence history for at least a year and a half. So kind of just riffing off of what Commissioner Slotnick said, it looks like this is also starting to extend to the rental industry. And I wonder if that's something that can come into play to create more affordable housing for people who are actually living within Missoula rather than kind of moving here from out of state. Not that that's a bad thing, but we definitely are running into an issue here.
Yeah, thanks. That actually, it's a good point, and it kind of jogs my memory what I was going to say earlier to this idea of subsidy, right? Which is, if you really want to make permanently affordable housing, you need a couple of things. You need a subsidy, and you need a way to keep it affordable, because there's restricted housing and there's market rate housing. That's it. So you can't build a $350,000 house, right? You build it and then it's worth whatever the market says. And even if you sell it to one person at 350, as soon as they can sell it for 450, right? So you need a way to keep it affordable. So at that point, you subsidized it. You have some income restrictions. You have some resale restrictions, and then you get to decide who qualifies to purchase it. And one model is to move that number higher. And then another model would be to have some kind of restriction based on employment, community member, something like that. And certainly ideas worth considering. The thing I get nervous about with that personally is I think everybody should have housing, simply. And, a lot of times those programs, I guess I'd get okay with it if it was like, okay, do you live and work in the Missoula area? But if you start talking about restricting to certain professions or things like that, I start to become personally a little more uneasy. Any other questions or comments for me? All right, well, thank you for giving me the time and attention.
Thank you, Paul.
Yeah, thank you, Paul. That was a great presentation. And those charts were amazing. So let me find the thing I need. Awesome. So next we have a subcommittee update about some of the work that we've been doing within our subcommittee. And I will go ahead and start into that. So recently, some of us met to discuss the draft for the support letter that we all had decided may be a good idea to do. And if I may, I'll share my screen on that just to give everyone kind of an idea of what it looks like. Let's see if I can find this thing. There we go. Okay, can everyone see my screen?
You might want to zoom the view.
Okay, thank you, Christine. So, Christine wonderfully put this letter together, and it's a pretty great draft template that goes over us as a body heading the letter, or whoever is striving to show support. a space where we can begin to make our argument or discuss, facts and things that we want to begin discussing and how we want to address it. I think the bonus about this is it'll give us the opportunity to organize together on how we're going to present this committee's, for lack of a better term, not necessarily authority, but the voices that we want to make heard, right? I feel very strongly that in regards to these letters, we should probably talk about them beforehand to make sure that there's no dissent or anything related to that. And yeah, it's a pretty straightforward letter. Does anyone have any questions, comments, concerns around, I guess, the construction of it, how it's bodied? Paul, I see your hands raised.
Yeah, thanks. Love the idea. Template looks good. Thanks for putting that together. I mean, again, love the idea. Do like the ability to take a stand, show our support. Where I've seen this run into problems before is in getting to consensus to where we all are comfortable with the language. Maybe we can overcome that. I think we just want to flag that as an issue, I suppose. And the other one that I'll say is, at least from my perspective, to sign anything on behalf of the organization does take a fair bit of internal review just for good governance. So the lead time needs to be a little long. Totally happy to make it happen, but probably 2 weeks to get the buy-in, and other folks may be the same. So just those two caveats there. We got to have a process to make sure everybody's okay with it, and you kind of want to get ahead enough of it that people can take it to their institutions if they need to. That might only be me in this case.
Paul, that's a really good point. I think that's something that came up in the subcommittee, is worrying that if we allow time to pass before we show support for things, that sometimes things move really quickly, especially when they have to go to other bodies of government. And so I think coming to an agreement on how we want to present this letter, whether we want that to be something that the subcommittee decides or something of a larger body, maybe it's good to have the agenda for next time or discuss now. If anyone else from the subcommittee has comment, please feel free to raise your hand and jump in. And I think those are really good points, Paul. Will?
Yeah, just to address Paul's question, I'm just trying to, I think the letter is great, but just trying to think of an alternative solution, which, like, if we think it could take like too long to get everyone's buy-in and sign off on the letter, do we think that it's more valuable to have something that's like, this is from the Affordable Housing Resident Oversight Committee? Or do you think it's valuable enough if enough of us who are comfortable speaking to it send the letter as ourselves and go to the public hearings and speak to it? Like at the end of the day, would it make much of a difference one versus the other? I don't know if anyone knows. I don't know the answer to that. I'm just posing it. I don't think that answer could be known, but if anyone has a perspective based on prior experience or anything like that they could share.
Is it okay if I share, Riley? I wanted to point out that at the bottom of the letter, there was included like a signature spot. And that was put there in intent that maybe if people weren't able to meet as quickly as possible and like the entire committee wasn't able to make a decision, maybe we could sign it saying these members of the Affordable Housing Trust Fund are in support or dissent of this project. Because it is hard to get everyone together, and it's possible that there has to be an emergency meeting to like get something signed. But to your point, Will, I think both, if we can. I think it would be great to have both members signing this letter as a whole to AROC, and then maybe like if people have space in their own lives to give like personal and public comment from an AROC point of view and from a personal point of view, because you're all on this committee, because you have education around like why housing is important. So I'd say both, but this letter is definitely something new. So I'm not sure what, like how it'll work so far, but I'm excited about the opportunities for it.
Laura, you had your hand raised?
Yeah, I apologize. I'm having computer issues tonight. I really value, Paul, your comments, and I totally agree. I feel that, yeah, this whole committee should be totally aware of what the subcommittee is doing, but to just, and I like to reinforce what Aubrey said, there's room for signatures, but some of these issues are the turnaround time is going to be less than 2 weeks, as with the most recent issue. So, but yeah, I do hear Paul's comment totally, and I agree with him on that aspect. So, and just once again, I want to apologize for my computer stuff. So thank you.
Paul, I think you had your hand raised, and then we'll go to Lori.
Yeah, thanks. And I should just be clear. I don't have a problem with. Oh, first of all, I think it's good to speak on behalf of the whole committee. I think that gives it extra power. I personally don't have a problem with making that happen, even if the language isn't perfectly to my liking. So I'm not going to make an issue out of that. I've just seen it happen before. And I guess 2 ways to address it. One is either you try and get some sort of consensus that at least everybody can live with it, or if you get to a quorum vote on it, it's good enough. So I'm more than willing to give it a shot. I mean, maybe we were running into problems.
I think Lori and then Will. Thanks.
Yeah, I just wanted to agree with Paul on the idea that it could be really hard to get consensus. I mean, in general, we're all really like-minded, but when you come into specific projects, then there's more opportunity for disagreement among the committee members. I would love to say that we always thought as one mind on any of the new projects that might come before this committee. And that could happen. I mean, that is absolutely possible. We're all here for a very specific reason. I have seen, like Paul, actually organizations that fell apart because they could not come to agreement on whether they should sign a letter of support or not. I think one thing that we should do is as we think about this is discuss it more and decide whether we need a consensus of all the members, just like Paul was saying, or whether if a majority of the members is enough to go ahead and throw the support of the entire committee behind the project. And, I don't have strong feelings with regard to which way we go. I just think it's something that we need to discuss a little more as we think about going down this road. I think it's really good. I would love to have our committee really being very public about things that we support or that we don't support. I just think we need to be thoughtful about how we go about it.
Thank you, Lori. Christine, you have the floor.
Paul, can I just clarify? And I'm operating with the assumption that there will be other individuals, if not on this committee now, but in the future, who have ties connected to their workplace associated to this committee. Were you communicating that it would take you 2 weeks to get approval to have your signature if we were to reach consensus on a particular project?
Not consensus, then 2 weeks. Also, I mean, I have to work this out, but I can probably sign stuff very quickly on my own. But for good governance, we do represent 50,000 people. So if we're going to sign this as Clearwater Credit Union, that does need to go up and down the chain. Typically, the board sees it. So they would want to see something substantially like what was going to be delivered, even if it's not the final draft. But that's for us to sign on as an institution. I can probably find a way to sign it myself much faster.
Okay, I think that's what I was wanting clarity around, is that your signature was not one and the same each time, potentially. Okay, thank you.
Will, you have the floor.
Thank you. I was wondering if it would be helpful to establish some criteria around what projects would be like even eligible for our support, or at least that would be like a shared agreement. And a couple things that I think about is, and it could be pretty general. It could be like, does this sufficiently advance the goals of a place to call home, our housing policy? We could go a step further if we wanted to. Does this align with our growth policy? Does this align with the committee's charter? And like, these are the questions, and like, not to get super specific, but just to make sure, because you could imagine there could be a development out there that could be antithetical to what the objectives of a place to call home are. And like, that could be like a first check we could do. And like, I just wonder if we kind of agree on those principles, that if we believe it aligns with our housing policy, and we can point to something in the housing policy that supports this development, then that's at least the step one criteria that has to be met for it to be considered. And my thought in bringing that up is, one, it just provides some guardrails around what we may or may not weigh in, and because I have no idea from past experience how these conversations could go. But Lori and Paul, just based on what you're saying, like, at least if we could define that, then if it's like, it's not related to that, then we're not going to weigh in on it. Like, we have a rule that says that's not part of our guidelines. But as long as it meets those minimum criteria, then my hope would be if it aligns with a place to call home, odds are most of us probably would support it. I realize that that'd be all open to interpretation, but at least it's a starting place that we could look to.
Paul?
Yeah, I like the idea, Will. It's, you always want to be careful that the process doesn't become the goal, but having sort of a rubric in hand beforehand can help when we're having these discussions, right? Help focus it, help give you a decision-making framework, and keep us from getting in the weeds. So something simple, yeah, does it align with these 3 or 4 bullet points? Could be useful.
So is that something that we want to try and define tonight in regards to like what we want to support, what the guidelines would essentially be? Will?
My suggestion, if it's not too experimental, would be to align on, let's just say it's got to align with the objectives of a place to call home. And we start with that. And then the first time one of these comes up, we see how that goes. And it's like, okay, like, is that enough, or do we need to get more specific? My hope would be we don't need to get more specific than that. So I think if we agreed that if it aligns with the housing policy, that's enough initial criteria. Like, if we could, like, I'd advocate if it's possible to agree on that tonight. If we want to discuss it more, that's fine. But that's the starting point. And then we try it and we see how it goes. And maybe we discuss this at our next meeting after we've gone through this process to understand if we thought that was the right way to do it or not.
Is that something that sounds Christine? Fantastic.
In suggesting that, Will, and just thinking about each of us and the work that we do, some of us are more acquainted with all of the content of a place to call home. And if we are going to bring this to discussion at our next meeting, I just would like to throw it out that perhaps all of us review that document again as we're considering that being a placemaker or placeholder, excuse me.
Okay, so I'm hearing just a general theme of the place to call home being a guiding principle for this. Christine, you're saying maybe we should put this on next month's agenda, review the document, see if that's something that's in alignment. I feel like that's pretty solid. Just to get us up to date on it, is that something else that kind of jives with everyone else? Cool. So why don't we add that to next month's agenda to within this month, we'll review the document, and then next month, maybe we can take a vote on the support letter itself. Aubrey?
I was just gonna say, if the subcommittee fills the capacity this upcoming week, we could like draft sort of just like a contingency of what that would look like what Will said exactly, like, hey, this is supporting a place to call home, and that's like our requirements for it. if we feel there's space for that. I think that's something we could definitely do before the next meeting.
Well,
I was just going to volunteer. I know the meeting time for that just unfortunately always conflicts with work for me, so I can't join. I'd be willing to volunteer to like I was just trying to look at the executive summary of A Place to Call Home, and I'm not sure that's the best place to look to, but I'd be willing to volunteer like as part of the subcommittee work to just go through it and try to like pull out the key sections that like, and I don't want to claim that I'm like the end all be all expert, but at least to try to help with some of that, because Christine, it is 95 pages long, and that's a lot to expect everyone to read. So I'd be willing to volunteer to like help summarize maybe what would be some of the key bullet points that we could find from the plan, cite them so everyone knows where they are. And that way you all could then look at it and not have to go through all 95 pages, but go through like the reference pages where some of the key information might be.
This subcommittee member accepts your proposal.
equally well, that would be greatly appreciated.
Yes, that would be amazing. Thank you, Laura.
And when's the next meeting? So I have a deadline for when to get this done by.
Are you referring to the subcommittee meeting?
Yeah.
If I'm right, it is next Thursday at 11 o'clock.
So the 19th?
It is, yeah. But I mean,
okay.
We do meet every 2 weeks, so we would have another meeting before.
No, I appreciate a good deadline, so I'd rather
Okay.
just as long as I know it's got to be to you guys by the 19th, that's fine.
Thanks, Will.
Awesome. Thank you all. Thank you everyone for that. Another theme that I was hearing is the determination of whether or not the letter would be something that's voted on by RROC as a whole, or would be individual, I guess, what's the word I'm looking for, support. And perhaps that's something we can bring to the table next time and vote upon. And just maybe we can mull it over in the interim and see how we all feel about that. Any questions, comments, concerns, curiosities? Awesome. So some of the other work that the subcommittee's been doing is Christine fact check some of the things that were going on at the university per the last presentation we had around the housing there. And Christine, do you want to share a little bit about what you found with the committee?
Sure, apologize, my microphone was off. So when the subcommittee met, and we had just heard from Montpurg some recent information as to what Montpurg discovered in their survey to 689 plus or minus students, brought up some discussion in the subcommittee that I have a relationship with Kelly Webster at the University of Montana, and wanted to use the opportunity of that information that we received, what students were communicating was reported in the survey, and some of the other information that I've heard at various other meetings throughout the community, or even in our committee meetings here, to verify and or give the university an opportunity to talk about what is actually going on at the university, and either confirm or oppose the information that we received from Montpurg. In the end, what really was discovered is that there have been errors on the university's part of having perhaps the wrong individual or someone who wasn't completely informed giving information as reports were going out. One of them being, and I believed I was very clear on the fact that there was 25% vacancy rate at the university for housing, not only because Montpurg communicated that, but because I had heard it in other committee meetings around Missoula. It's much more nuanced than just a 25% vacancy rate on campus. There are elements that impact that vacancy rate, whether it's reconstruction of a particular dorm, whether it's the number of rooms that were held during COVID over the last year and a half, whether it's students in transition from one dorm room to the other, or shared dorm rooms that are becoming single dorms, or any other sort of reconstruction on campus that might inhibit the number of rooms that they can use based on sound access, etc. So after talking with Kelly and having her express some of the nuances and really just clearly state that the university has a wait list for dorm rooms for next fall. And explaining even further, I had scheduled the meeting with Kelly. It ended up just the day after the Missoulian article about the students who were being released from leases in the homes on 4th and 5th Street, or 5th and 6th, pardon me. And Kelly was communicating that the university had every intention and has put high priority on finding those students homes or apartment replacement, and that the university has other homes that they do rent and have leases with students and other students who are leaving because they're graduating, and places to put these students who are being asked to leave from these homes to refurbish them into homes that they could sell and or rent to faculty, staff, educators. So there's little nuances that are getting missed in the news. After speaking with Kelly for about an hour, she was extremely open and would very much love to come and speak to this committee, and even speak to this committee on a regular basis with an individual, whether it be Sandy, I can't remember Sandy's last name, from University Housing, to come and speak directly about what's happening in the current state of university housing each semester, but to come and give us regular reports so we feel like we understand the nuances and the impact of what's happening on campus and how that relates to the nuances and the impact of what we're experiencing in the overall community. So I would like to encourage us to invite Kelly, and I believe maybe it was Riley or Aubrey who was sharing that we do have a speaker for June. We're not meeting in July, maybe August, or did you say we were open in June? I can't remember, Aubrey, but would love to invite Kelly and someone else from the university to come and to give us the opportunity to ask questions and learn more about what are those nuances on the campus and what is impacting some of campus housing, and is there any possibility of some duality and partnership to work together when and if there are opportunities to create more housing or housing opportunities within the community or on campus for students. If you have any questions, I can try to give more information, but I also do not want to create more misunderstanding of the university's story. I would love to have them come and represent themselves.
Christine, I do plan to reach out for August.
Awesome. Thank you, Christine. So some of the other work that the subcommittee has been doing is we have been coming up with a game plan for the planning board, and we decided to send a couple of us to speak and present on the Affordable Housing Trust Fund and the ARA committee. Aubrey and Emily will be going to talk about the trust fund, and then myself and I think Will, you were going to try and video in for that. We'll be going forward to just talk about AROC, the subcommittee's work that we've been doing, and then kind of discuss the importance of affordable housing and the responsibilities that we all share as a community, as planning boards, as committees within Missoula, in regards to our public service and the conversations that we're having. I think those are the biggest points in regards to that. Does anyone have any questions, comments, curiosities, talking points that they'd like to for us to bring up in that? Christine?
I feel like this is the appropriate time, and I had mentioned to Aubrey that I would need to leave early this evening. I have a daughter graduating from the University of Montana, and the gatherings and parties and goodwill starts this evening, and I need to depart. So I'm just going to state that for everyone rather than just disappearing from the screen. So we'll see everyone again. Thank you.
Thank you, Christine. So yeah, that sounds fun. Graduations are cool. So yeah, that's the long and the short of what the subcommittee has been doing. I think future work is going to be working on this letter, gathering more stats and data, and figuring out, you know, how we all can aid in this affordable housing crisis. I think a big role of the subcommittees has kind of been gathering stats and just having really good conversations around, you know, what does this work really look like and how we can all support each other in the larger body. Will?
Yeah, I just have a related question that's maybe for, I guess, Aubrey at this point, or maybe Ricky, or maybe Emily. But just with some of these development packets that get put together for development services, I know they have all the agency comment. Is the housing division asked for comment on developments? Because I think when I've looked through a couple, I don't see it. And I was just curious if that's something your division does, or if it's just the planning department is the only kind of division of that larger organization that would put comment into that packet.
I can answer that. So if the project relates to the community development division, then yes, we would be asked for comment, and we participate. Ricky and sometimes I participate in the design review meetings, so we're sharing our input there. But for the Grant Creek example, I'm just going to give that one because that's the most recent. That is a zoning rezone, and it doesn't have any other conditions, so our perspective isn't really relevant in that project because it really just goes by the law and the code. So when there are projects that influence or have meet the housing goals, or specifically that's why they're applying or things like that, like the example I'm thinking of is we gave agency comment on the Hogan House project. That's the co-op senior living project that's being built. We gave comment on that one, but for the most part, we are not included, but we're internally involved. Ricky, would you add anything or change anything?
No, I think that's accurate. The only thing I would add as far as the internal involvement is Emily's been doing work to be included earlier in those discussions so that she can work with developers at the beginning of the projects to try and include some more affordable units. And that's sort of a new process that our department is undergoing, and something that I think has been pretty effective. And it's definitely flagged some projects for us that we didn't know about otherwise. So just a shout out there that we are working to identify some more of those opportunities earlier in the process.
Awesome. Thank you, Will, Ricky, and Emily. So does anyone have any questions around the subcommittee? Emily?
I heard this, but I just want to reiterate that the work you're doing to organize and formalize your process is great. But just a reminder that as members of the committee, you can go and give public comment anytime, and your membership and your participation on this committee is a credential that you can share individually without needing group consensus. So just want to remind you of that in the meantime, and appreciate Will and Riley for participating and sharing their role on Monday too, just for an example.
Aubrey?
I just want to follow what Emily said. I missed the meeting that night and I watched it the next day, and very quickly emailed Emily and was like, you have to go listen to their comment. It was awesome, and it was factual, and it was passionate. So I thank you both for doing that.
Awesome. Thank you. Also, thank you for clarifying that, Emily. I think that's something that a lot of us were wondering whether or not it would be appropriate to share our roles with the committee, or on the committee when we go to public comments. So that's great. So our next agenda item will be unified funding round update. And I will turn the floor over to Aubrey and Emily.
Yeah, so we just wanted to give a little bit of an update on our recommendations for the unified round. Today we presented to the Housing Redevelopment and Community Programs Committee. We took forward all of our funding rounds, or all of our funding suggestions that we spoke about before. We do have an update on Rivara for later in this presentation, but there was great unanimous support and like no questions. So I hope that means the presentation was good and that they were really supporting of these projects. So that, we'll go to consent agenda vote to set a public hearing on the 16th, public hearing on the 23rd for City Council, where we will represent those projects. And then on the 6th, that will be final consideration and voting. So if you ever wanted to like comment on those projects and support or dissent, I guess, that would be on the 23rd at City Council. Emily, do you have anything to add to that?
Oh, I shook my head. No.
Great. Next is our Missoula Gives update. We made $5,200. So yay, that's great. Very excited about that. Thank you, Will, for sharing the information about being able to create your own fundraiser. Thank you everyone for sharing information and social media posts in general. It was very fun last week to just refresh my page and see all of our donations. So we did get thank you cards sent out to like all of our donators, and I just want to share appreciation to everyone on this committee who did donate and share all that information. So I'm excited, and next year we're going to do it again, hopefully, and we will do further promoting and hopefully do some matches that year. And but I am proud of how we did for getting it planned like in a month. So yay to the extra $5,000 for our fund. And then Emily, I'll pass it off to you for the Scott Street development update.
Cool, thanks. So today as Aubrey said, today we presented 2 projects to council, which were the Wolf Street Community Land Trust and Co-op project with North Missoula Community Development Corporation and the Homeward Homeownership Center Consumer Housing Services project. And we did not present the Scott Street development because we are planning to, we're just delaying that recommendation because the Rivara team is working on getting their construction and schemas finalized, and they don't quite know yet what the unit configurations will look like. There is a concern with the increases and changes in cost to construction and to projects that there may be a larger gap than they were originally anticipating with the price restricted home sales. And so they're exploring in partnership with the city the potential for doing a market rate carve out for a number of the community land trust homes. They'll still be on the community land trust, but they wouldn't be sold at 120% AMI, and they wouldn't have the same resale restrictions. So because of that, we have recommended that we'll hold off on taking their project to council until they know more about what they need in terms of a market rate carve out, or if they need a market rate carve out in order to make the construction project part of it pencil and close the gap of what they think they can sell them for and what they think it will cost to build them. So we have also recommended that once they have that and they have the design proposal, I guess, then we will take it back to the scoring committee, because the project has changed significantly from what it was originally presented as in their application. And so if the scoring committee endorses the project as it now stands, then we'll take it back to council. And Rivara is really supportive of that. They understand that, we have oversight of these funds and that we want to ensure that what we were endorsing originally is what is funded, or that if it changes significantly, that's endorsed as well. So we didn't take it to council. We took this explanation to council today, but we hope to and intend to take their recommendation as long as it still aligns with the values of the trust fund and is endorsed by the scoring committee. And we think that'll probably be the fall, just based on the process that they're in now. Are there any questions about that? Cool. Do you want to go to the next? Do you want me to do this, or do you?
I can do it. We just want to remind everyone, I did send an email about this as well, but we have 2 AROC positions open. We have the alternate 1 position open, and we also have a community member position open. On this slide, you can see the conditions of having some lived experience and having had used housing services. But if you know of anyone, please send them this information. Those applications are due May 20th by 5 p.m. So they have a few weeks, and then those will be sent to Heidi Bakula, and her email is right here. So please share that information to anyone that you think might have good comment and good information for this committee. Just a reminder, there's no July meeting. Next month, we're hoping to create or have a presentation based upon tenant landlord relationships. So that's just a little bit of a teaser. And then for August, I will reach out to the university and make connections for that. And then looking ahead, if you have any items that you want for June or the future, just feel free to email me. It sounds like we have a few things to put on the agenda from the subcommittee. So I will be sure to add time to vote and make comment on our letter and our stipulations for support. But if you think of anything else, just let me know before next month. And then Riley, you can announce our next meeting date if you want.
Sure, I can do that. So our next meeting will be on June 8th over Zoom from 6 to 8 p.m. And I believe there is a link on the city website. Is that correct, Aubrey? Is there a link being posted on the city website?
There will be a link when I create the meeting. I'll send it out a week ahead as usual.
Cool. Awesome. Thank you for that. So yeah, looking forward to see everyone's smiling faces at that meeting. And we will go from there.
Riley, would you like to ask for a motion to adjourn?
I can definitely do that, Aubrey. Would anyone like to motion that we adjourn for the evening?
I move we adjourn.
I'll second it.
Alrighty. We don't have to vote on that one, right? Like we're
We're good.
Okay, cool. So we'll see everyone on June 8th at 6 p.m. and y'all take care of yourselves and have a good week.
Thanks, everyone.
Thanks, Riley.
Long.
Bye.
Thank you.